Hey there, everybody. It's Mark Yagi, and welcome back here. And every once in a while, I kind of just like to go back to basics. So we're going to be talking about how to create reliable income from the stock market and just going through the methodology and what my thinking is in putting this program together. And I hope it resonates with you. I think it's got some good stuff in there. There's a lot of good things on the screen here: freedom, passive income, covered calls, less than an hour a week, 2 to 4% a month, conservative, financial education. These are the things that are my themes in what I talk about. So I want to go into a little bit of that, and then I'm actually show you how this happens later on in the show. And by the way, stick around to the end. I've got something to offer you if you want it. If not, that's cool. You can just keep hanging out here with me. But let's get into it right now. So I'm going to show you how I make 60% a year, or at least how I did it. I just want to kind of show you a little bit of a peek into what I'm doing because a lot of people seem to be asking me to do that. So over the last few years, I get to travel the world. I spend about 20 minutes a week officially on my trading, and then the rest of the time I can just kind of pretty much enjoy life. So that's really what we're going for here. And just to start off with a little bit of proof for you so you know I'm not blowing smoke, is here's a screenshot from Schwab. And Schwab just kind of shows this IRA that I started with $111,000 on basically April 30th, 2020, May 1st, it says here. And then here we are about 2.5 years later. What's that? 3.5 years later, I guess. And the account is worth, according to this account, this statement, $511,000. So it's a return of 457% in just a few years. And if you look at the right or either one of those graphs, you can see it's not smooth. Well, why is that? Well, I'm showing you like the most aggressive of this conservative program. If you know me, you know that I trade Tesla, and a lot of Tesla was traded in this account using covered calls. So during that period of time where there's a lot of decline, you can see that it's because Tesla pretty much declined in there. If I had chosen a little bit more conservative stock, we would have a much smoother graph. But hey, listen, if you had told me, hey, Mark, you're going to take $110,000 or $11,000, and it's going to turn into $500,000 in 4 years, but you're going to have a lot of volatility, would you have taken that bet? And my bet is, well, what's the alternative? That would be my question. The alternative is you make 10, 12% in the stock market over time, and this is way higher. So I would take that all day long. It's just you have some volatility that you have to sit through, and that's part of the game. And there's ways to minimize that. And not everybody takes the same approach that I do, and I'm going to show you a lot of that in here. By the way, here's just a quick screenshot of the same kind of a chart from Schwab this morning, and you can see the value is $740,000 now. So even more compelling than $511,000 or whatever the last slide just said. So there's a reason to kind of hang in here and watch this. Even if you've already watched a lot of stuff from me, this is good review because I'm going to be showing you kind of the methodology and the philosophy of how this builds up. So the ultimate goal is to get people to the point where they can have a 7 or an 8-figure portfolio that creates $10,000, $20,000, $30,000 in monthly income. I work with a lot of investors now that are multimillionaires. They're 7, 8, and 9-figure investors, and they are just looking at this program for putting together cash flow. And it's amazing what you can do if you just open your brain to thinking in a new way. And that's what I'm going to try to do here in the next few minutes. So buckle in, grab a cup of coffee, maybe a piece of paper and a pencil, or your phone for your notes or whatever, because I'm going to try to show you some basic stuff, but I'm also going to show you some advanced stuff as we kind of go forward through this. Not too much advanced stuff because I don't want to lose everybody, but I'm going to try to appeal to quite a few people here. So who is this for? Well, it's for anybody who wants to create income from their investments for about 2 to 4% a month, right? And it doesn't sound like a lot, but 2 to 4% a month is 24 to 48% a year. And I don't know about you, but most people that I know don't get 48% a year. Do you get 48% a year? Do you get 24? If you do, awesome. Maybe there's a way that you can augment that by watching this, and maybe you're just happy with what you got going on. Anybody who's trading their time for money, that's somebody who should watch this. Anybody who does not want to spend time in front of a computer, you'd rather go out and live your life, although this can kind of become a little bit addicting. Anybody who's open to learning a new way of thinking about investing, and that's kind of what this thing is we're taught buy low, sell high, buy and hold, all these Wall Street things, diversify, blah, 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 and we end up getting 8, 10, 12% a year. And I'm going to show you something that's a little bit different from that. Anybody who understands that investing is playing defense as well as offense, and that's what this is going to show you too. Anybody who's not trying to hit home runs, right? So if you're not trying to hit home runs, you're trying to just hit singles, these little gains add up to a lot over time. So I'm going to show you some of that. Who is this not for? Because, if this is not for you, let's not waste our time. Let me just tell you who it's not for. It's not anybody who's looking for a get-rich-quick scheme, because if you want to do a get-rich-quick scheme, go out and buy options, right? And hope you're right, and if you're right, you're going to make a ton of money. It's awesome. You'll make a ton of money. But 80% of the time, you're probably going to lose money. At least statistically, that's the word. Is that you'll end up 80% of the time losing money. So you'll hit a big home run, but if you're looking to get rich quick, this is not for you. So that's somebody. Again, hit it out of the park, whatever other analogy you want to use. Anybody who's not willing to stick to a proven system. So if you are somebody that doesn't have discipline, cool. I used to be that way. I didn't have discipline, and I realized that wasn't serving me. And so I just really started to hone in on discipline in a lot of areas of my life, and it certainly has proven to be good for me. Anybody who needs a lot of stimulation in their investing, this is a boring way of investing, right? And so there's a lot of people that watch some of my videos and they're like, oh man, you should be trading today. The stock is up, the stock is down. What are you doing today? It's not always, something that I do every single day. Sometimes it's just an over time methodology, and I'll show you how that works in a sec. Somebody who does not have that long-term mindset. So if you're thinking this is a weekly trade, or if you watch some videos and you're like, wow, you lost $5,000 this week, you suck. Well, that's your opinion, but this is not a weekly trade. This is usually I go out for years and I just create that income, and that income creates the success. So that's what I'm going for here. This is a quote that I love. Most men lead a life of quiet desperation, and they die with the song still in them. And the reason I think that happens is because we don't know what we don't know. We don't know. Like we're usually stuck in a bubble. Our parents, through no fault of their own, might have taught us a certain way of thinking, or that something is bad when they didn't know. And so we live within this safe boundary, right? And then we're just, the older we get, the more desperate we get, right? So I love this quote because it makes us think, wow, there is so much more out there in the world than we see. Henry David Thoreau had this beautiful quote, and I'm building on that quote because I want to show you a totally different way of investing that maybe you're not aware of. And even people who do some of the investing styles that I do in covered calls, they don't understand because it's a totally new way of thinking, and I'm excited about bringing that to you. So hopefully you're excited too, right? Are you excited on this? I want you to be, because you're about to learn something really cool. The thing about it is most investors are swimming upstream. We're like that salmon that's going upstream to spawn, and most of the time those salmon get eaten by the bear. So swimming upstream is just tough. Why not try to get things on our side? But here's why we are swimming upstream. Because Wall Street is run by salespeople and lawyers. And I used to be one of these people. I was on Wall Street for a long time. I was a salesperson, not a lawyer, but I have some in the family and I love them. But frankly, that's who runs Wall Street. It's not people that are trained in investing. It's people that are trained in sales. And so they're selling you on keeping your money there, right? Because if they keep your money there, they can go and borrow against it, trade their own portfolio using some of the stuff I'm going to show you right now, and they're going to get you an average return. So you might get 8, 10, 12%, 15% on a good year. You might be thrilled. But average returns don't get them sued. So the lawyers are like, hey, be really careful, diversify the crap out of these people so that when their really good stocks go up, they make an average return. And when their really crappy stocks go down, out of their 500 stocks in their ETF or whatever, they get not so crappy a return, and they get just kind of an average return. But don't forget, they have to get paid. And so they get paid right off the top. The averages are about 3.4%, right off the top of your money, whether you make money or not. So if you're making 10% and somebody's getting 3.4% right off the top, you're already down to, what, 6.4? 6.6, I guess. And the bottom line is, if you're not beating inflation, and I just recently did a study, me and my friends at ChatGPT, that inflation, at least in my basket of goods, is about 11.1% a year. If you're not getting 11.1% a year, you're going backwards in terms of purchasing power. In other words, in 10 years, you're going to be able to buy way less with the same amount of dollars. So you've got to keep up with that inflation. Now, yes, they say it's coming down and all that stuff, but I don't see it coming down. I don't know about you, but things are not getting cheaper at the grocery store. Things are not getting cheaper in rent. Things are not getting cheaper to buy a car. They're going up. So I don't care what they say. I don't believe half the crap they say. Maybe you're still believing the mainstream media. I don't believe anything they say anymore. I have to do my own studies, and we have some cool tools like ChatGPT to help us do that. But most investors don't have a system. So, and most brokers don't have a system. Their system is, hey, we're going to diversify. We're going to throw you into this nice little portfolio of stocks, bonds, ETFs, maybe some gold or whatever, and they're just going to sit back and hope it goes up, and they're going to skim, 1, 2, 3, 4% off the top, and everybody gets paid, right? They all have nice cars. They have beautiful buildings. Somebody's paying for that, and it ain't them. It's you. So you got to watch out for that. And they don't have an edge, right? And we want to have an edge. The only edge they have is keeping you in the market. Now, I want to tell you, and I'll probably talk about it in a minute here, about this study that I did in 2023. Yeah, I haven't updated the study, but it's the early part of the year right now, and it doesn't really matter what year. You can go back any year and study this stuff, but the S&P 500 did 24%. The top stocks, though, in that year did 145%. Did your broker have you in the top 12 stocks of 2023? I don't know. I bet they didn't. I bet maybe they let you buy one or two. Let you, right? It's your money. But they were probably advising you to just buy mutual funds, buy ETFs, buy a stock here or there, buy some bonds. Bonds are down 50% in the last 3 years. So that's not very good advice if you're in fixed income buying bonds, paying a small percentage like 3-4% when bonds have gone down 50%. Just the odds are not in your favor. And I'm a big odds guy, big probabilities guy. I want to get the probabilities in our favor. So I'm going to be talking about how we do that in a second. Here's the problem, though. If the market is high with that kind of investment, you're not getting as much money as you should. I just showed you the statistics, 24% in the S&P 500, but you left 145% on the table because you didn't take advantage of the top 12. Now, I'm not saying you can. I'm saying you should be striving for that to keep up and ahead of inflation and actually have some growth on top of that 11%. If the market's low, you're probably losing even more money, right? Because you got to pay that broker to help you lose that money. The real problem is, are you getting steady income? So I've got some, and I used to be a broker, right? And I'll tell you about that in a second. But I've got some vacant land, and I've been sitting on some of this vacant land for 15, 20 years. It doesn't pay me any income. I'm just sitting there hoping the value of it goes up. The problem is the value of it isn't going up. The price may be going up a little, but while I'm waiting and I'm getting older, my beard is getting whiter, right? I'm not getting that income that I should be getting as the thing goes up. I have to sell it to be able to get the value out of that. And it's the same thing with your stock. Sometimes you just sit there and you have to sell the stock to get the value out of it. I'm a little bit more about income. I like income and cash flow. And I've revolved a lot of things about what I do around income. And I hope you see what I'm talking about here. I'm going to show you an example. Here's one of my favorite quotes. If you always do what you've always done, you'll always get what you've always gotten. And so, if you keep driving the Model T, you're not going to be able to go 100 miles an hour or 60 miles an hour even, right? And so if you're stuck in the past, you're not going to be able to move to the future. If you always want to keep one foot on the dock, you'll never be able to get on the boat and take off, right? So remember that. You've got to start to change your way of thinking if you want to get ahead. And there's ways to do it that you may not be aware of. Some of you may be aware of it already. But you've got to change your thinking. To be successful, you've got to move to the new technological way of thinking. And there's things that are changing a bit in investing, and you have to be aware of them. Now, I've taken some of these things from the past, from some of the giants and my mentors, and I've learned from them, and now I've transformed them into something new to change my way of thinking. And I'm sure glad I did, because if I didn't, I'd just be sitting there making 8% a year on average, waiting for 20 years for my portfolio to go up, and then I'd have to sell one of my cars when I was retired because I don't need them both and that kind of thing. I don't want to be in that position to have to make those kind of decisions. I want to have abundance. I hope you want to have abundance too. That's what it's about, right? So anyway, who am I? Who are you listening to? I'm just a bald guy on the internet. I'm a wealth architect. I'm a manager of money. I'm an author, blah, 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 all this other stuff. I'm not going to spend too much time on myself. Got I don't want to even say it, but it's more than 40 years of experience I'm getting closer to the other number. That's why I don't want to say it. Former CEO of a Wall Street company for over 10 years, and I sold that to one of the big banks. And I've traded over $14 billion worth of securities through my funds, through my personal stuff, through my company stuff. I've got a lot of experience in trading. It hasn't always been successful, but I always believe that even when you fail, quote unquote, fail in investing, you still are successful as long as you learn from it. So that's my belief. I'm a financial advisor, and I have written a lot of books about money, a lot of books about other things too. But the main thing I talk about these days is this thing I call the cash flow machine. And I'll tell you a bit about that in a bit if you want. Written a book called Passive Income for Doctors, Hacking Money, which is an intro book on investing. I've authored lots of trading courses, and that's what I'm talking about today. And so stick with me, because I'm hopefully going to open up your eyes to some of the stuff that happens. I know where the bodies are buried on Wall Street. I have an income fund that utilizes what we're about to talk about. I've got all those crazy certifications that I've had. I let them all go because I don't think they help me or they help anybody else. So that's who I am. Let's get on with some of this stuff. I basically travel around the world and teach people about investing. I also do the same thing that I teach people to do, and this is my lifestyle. I'm not saying it's everybody's lifestyle. Here's a few photos. But I believe in these 5 freedoms, right? I believe in financial freedom, time freedom, location freedom, purpose freedom, and people freedom. Financial freedom is obviously what we're talking about, having enough money to do what you want, where you want, with whom you want, wherever you want, and how you want it, right? So that's kind of what financial freedom is. But I also like to have time freedom. There are days where sometimes I don't get up out of bed until 7 o'clock, or whatever. And I like that freedom to be able to kind of just do what I need to do, and only work when I feel like I'm working, need to work. But I have the control of my time. I'm not at the whim of somebody else's control of my time. And I think that's really important. I like to travel. So I'm proud of the fact that I can go around. I'm actually in Colombia right now as I record this. I love it here, by the way. And it's location freedom. So I go to Greece every year. I've been to 72 countries. I'm on my way to 100. But that's just me. Some people just say, I'd rather play golf. Cool. Well, you have that ability. I like purpose freedom too. My purpose right now is to help as many people as I can learn that there's a new way of trading, that there's a new way of thinking that's going to help them, make cash flow and help them in their retirement and help them in a lot of ways. That's my purpose in this part of my life. And I'm really having a lot of fun doing it, and I feel like I'm helping a lot. And then people freedom. Those people that you don't want to hang out with, that maybe around a holiday meal that they're there, or other people that you have to hang out with because maybe they're at work. Well, I kind of like to have the choice of not hanging out with people that are toxic in my life. So I think people freedom is really important. So these are the freedoms that I really believe in, and you could pick one or two or maybe all of them. But that's what I'm about to tell you feeds for me. It feeds me in these 5 freedoms. There's other ones too, by the way. Anyway, so remember how I was talking about in 2023, those top 12 stocks that outperformed the market, 145%. Here are those stocks. You've heard of them. NVIDIA, Meta, which is Facebook, Accenture, Royal Caribbean, Builders FirstSource. Go down to the bottom, there's Palo Alto, AMD, Carnival, Tesla, Salesforce. These are the big ones that happen to have a big year in 2023, right? They were up 145%. Look at the year-to-date return on those, right? When you average those out, it comes out to that median 145 or whatever the average is. I'm not too great on statistics. I'm good on probabilities. But now I want to just kind of show you, hey, if you had invested in some of these stocks, I'm not going to go through all of them, and I'm going to pull in some other ones too, but here's the difference. The S&P 500 during this long period of time, from for the last 10 years, 2014 to the end of 23, made 15.4% per year. That's more than the average that it normally makes. It normally makes around 9.2% or something like that. It's inching up now because we're printing so much money that it's going into hard assets. So S&P 500 did good. 10-year return, 15.4%. But Tesla, 242%. Did you have it that whole time? I've had it a lot of that time. I've endured some of this, and I've endured a little bit of that. And I'm still enduring a lot of this up stuff. How about NVIDIA? 15.4% for the S&P, 1,200%. That's a life changer, right? I always say it only takes one stock to change your life. And this could have been the one. Were you in it? Did your broker call you and say, hey, you need to buy some NVIDIA and hold it and sell calls against it even, which I'll talk about? How about Meta? 15 for the S&P, 54% for Meta, 86% for Apple. Look at that chart. And if you go back farther, I mean, Apple's crazy. Over the last 25 years, how much it's outperformed everything else. Amazon, same kind of thing. Last 10 years, 67%, 4 times what the S&P 500 did. Bottom line is, I kind of think that Wall Street hates us, but they like our money, right? And so they want to hold on to our money so they can make money on our money. Well, why shouldn't we do that? We should do that. Like, I think we have I always say, never give up your power in your health, your wealth, or your time. We should have the power of taking control of our money, right? It's actually kind of funny. A few years ago, in the early 1990s, I can't believe it was that long ago, but I was working for a big regional brokerage firm. It actually was a national firm, but they called it a regional firm. I don't know why. Anyway, I worked for this guy named Ernie Oldie, and he had created 200 offices around the country. It's a pretty big operation. It's been sold to H&R Block and a few other things since then. Anyway, besides the point. My point is, early on in my career, I knew that covered calls were the thing, right? I thought they were a really conservative way for people to invest, and I thought it was a good thing to offer to our clients. And so I went to him because I had a kind of an inside track. I knew him, and I said, hey, listen, we need to offer this to our clients. And he basically shut me down. And it was later on that I found out a couple things about getting shut down on that. Number one, they were more interested in making money off of stock trading, right? They're market makers making money off of stock trading than the investor making money. I found that out. And number two, they didn't really make money off of options trading. In fact, they were of the mind that it was a risky thing, and even though it was safe, they didn't want to hear about it. They just believed that it wasn't worth, the juice wasn't worth the squeeze. So I realized then, if they're doing it, what about all the other big banks? What about Merrill Lynch and Smith Barney and Citibank and JP Morgan, all these big banks and big brokerage firms that were out there? I realized they're not in it for us. They're in it for themselves. They're in it to make money for themselves. I mean, there's nothing wrong with making money. I don't knock anybody for making money. But when it comes at the expense of the consumer, or looking out for the consumer, I should say, I had a real problem. That's why I think that Wall Street hates us, but they like our money. I mean, are you with me on this? I hope you are. And the way I talk about doing it is you have to have a system, okay? If you don't have a proven income system, you are doomed. I guarantee it, because you're trading with emotion, and that's going to kill you, right? A system does the opposite of that. It tames that emotion. So here's where if you know how covered calls work, cool. You can skip ahead 3 minutes and 10 seconds on this video, and you don't have to watch this little animation about how they work. But if you want to review, even if you know what they're like, here's a good little analogy that I use using real estate, because most people can touch and feel real estate, and it makes a lot of sense. So I'm going to show you this little video. It's 3 minutes and 10 seconds long. If you don't want to waste your time, or if I don't want to waste your time, just jump ahead 3 minutes and 10 seconds, and we'll keep going with the rest of this. Okay, here we go.
So here's a guy named Jim, the guy with the red tie here, and he owns some land. Let's call it a city block, and it's worth about $100,000. Then there is Bob, this guy with the red hair and the beard, and he sees this lot is for sale, and he hears that a big hotel is going up right across the street from that land. So he thinks that land could be worth maybe $200,000, not just $100,000. But the problem is he doesn't have $100,000 to buy it. He's kind of broke, but he sees this big opportunity there. What he does is he approaches Jim and he says, I'll pay you $10,000 if you'll sell me your property anytime in the next 6 months for your asking price of $100,000. Jim says, wait a minute, if I sell you my property for the same price I want to sell it for now, but the only difference is you're going to pay me $10,000 to take it off the market and give you a chance to buy it anytime in the next 6 months, and I get to keep the $10,000? And Bob says, yeah, that's what I'm offering. So they shake hands and they make a deal. So, who has the risk here? Well, looking at Bob, he could lose his full $10,000 if he's wrong. Now, if he's right, he hits a home run. Okay, now Jim, his deal is he gets to keep the $10,000 no matter what. It goes right into his wallet, and if Bob exercises his option, Jim also sells his lot for the asking price that he wanted. He gets his $100,000 too. So Jim in this case has a relatively low risk. Make sense? A week later, Bob finds out that it was just a rumor, and this hotel is not going up, and it's not going to make that property worth $200,000. And Jim still has a piece of property that's worth $100,000. Nothing's changed on his side. Let's analyze the positions. Jim still owns the lot, and he got a $10,000 bonus or a 10% return. He also reduced his cost, he reduced his risk. That's another way to look at it. Bob, on the other hand, got unlucky. He invested his $10,000 and he lost all of it, so he was really unlucky. In this case, Jim basically just collected rent from Bob on his property. So over time, I would ask you this: who would you rather be? Would you rather be Jim, that has the lot, or would you rather be Bob, that you know was swinging for the fences, but he lost it all? Well, that's an easy one. You want to be like Jim. You want to be the guy that doesn't take the huge risk. Now, can we be Jim in the stock market? Well, you better believe it. And if you've ever played Monopoly, it has a couple of places on the board. Boardwalk and park places are the most expensive properties on the board. But if you own any properties on the board, anytime somebody lands on them, they have to pay you rent every time they go around the board. So there's always a Bob out there, there's always a gambler out there that's willing to pay you rent. And if you're Jim, you could take money from all the Bobs over and over and over again, all year long, and that's what we want to do. We want to start collecting rent.
Okay, so are you in it with me? I mean, are you in it? Do you understand the concept of renting stocks now, or collecting what I call the juice, that money coming in, that cash flow coming in every week, every month? Well, let me go into a couple of concepts when we sell options. So you saw that Jim, I think it was selling those options, right? He was selling the option on his house. Well, the day before that option expires, it's worth a lot less, all other things being equal, than it was the day that Bob came in and gave him that money, right? And so you have to understand that this is the graph that happens on every option. It goes from left to right, and it dives at the end. I don't care if it's a day, an hour, a week. This is the same graph that happens. It approaches this graph. And so it dives at the end. Well, that's bad if you own it. Like, it's losing value every single day. But when you sell something, right, you sold it with the idea that you're going to have to buy it back at a certain period of time. Now, you might buy it back at zero, but all things being equal, this is the graph. So you collect the 100 or whatever the number is there, right? And at the end, you have to buy it back for zero. So it's buy low and sell high in reverse. Hope you get that. But this is the option I want you to burn into your brain, because this is what happens to the juice. I call this the juice. You collect the juice in the beginning, and you have to buy it back for very little at the end. This is the whole crux of what we do in my system, in the cash flow machine. And I'm going to get into it. It's hopefully will start to come a little clearer, but it is a new way of thinking. So I base my whole philosophy on the 4 cornerstones that you need to have. So I don't care if you get these from me or somebody else or whatever, but you got to have these to be able to invest properly. And in my system, there's 4 cornerstones. So it's finding the right stock. That's the biggest question I have when I go to a cocktail party or a dinner or something. People are like, hey, Mark, what should I invest in? Hey, I found this stock. Everybody wants to talk about the stock. Hey, that's important. You got to find the right stock. And I like institutional quality stocks. I'm not going to go into how to find the right stock here, but I like institutional quality, high volume stocks. Those are the ones that help me do this strategy. Then I want the right market. Why do I want the right market? Well, if you're fighting the market, you're like that salmon swimming upstream. But if you have the right market, I think it's more like a tailwind. You're sailing along, you open up your sails, and boom, it's so smooth and quiet, but yet you're still moving at the speed of the wind. And so the right market is a nice tailwind that I really think is important. When you put the right stock in the right market together, you get a probability bump that I'll tell you about in just a second. And then you get the right spot on the chart. See, not every spot on the chart is conducive to the stock going higher, right? A lot of people try to buy stocks on sale. That's a tough game, right? Because that's like catching the falling knife. I don't know when the stock is going to stop going down. I think I do, but if I get emotional, I keep buying the stock on the way down, and sometimes it takes 3 years to recover, all those kinds of things. But I like the right spot on the chart. There's a couple spots on the chart that I can show you statistically over time that have your best chance of success, right? So we want to find that right spot on the chart. And then what we do is we squeeze the juice. This is also collecting the rent. It's collecting the time premium on the option. And that's where we get our income into the account. So the right stock, you might get about a 5. When you click a mouse to buy a stock, you got a 50% chance of being right and a 50% chance of being wrong. So does the other guy on the other side of the world that's trading against you, right? So how do we get that probability from 5 to higher? Well, the right stock gives you about a 5 to 7% probabilistic benefit, right? The right market gives you another 5 to say 7% benefit, right? 70% of a stock's performance comes from the direction of the market. So the right market is important. The right spot on the chart, let's call that another 5 to 7%. So we're adding little probabilities on top of our 50% chance. And when we squeeze the juice, 100% of the time we keep the juice, the time premium, the rent, the extrinsic value, whatever you want to call it, we get to keep that when we sell, when we squeeze that juice. So that's a big advantage for us. The stock may go up or down, but we get to keep the juice. And this whole system is revolving around keeping the juice. And that's this whole thinking mentality that revolves around that as well. Is it starting to come a little clear to you? I'm going to show you some numbers in a minute, but I wanted to kind of get the philosophy clear in your mind. Let's keep going. The stock market is designed to transfer money from the active to the patient. Now, Warren Buffett, one of the greatest investors of all time, said this, and he's right, because he's like 105 years old or whatever he is today, like 98 or 96. Well, he's old. And he had the time and the patience to be able to make his portfolio grow. Now, he did a great job with stock selection. Remember that right stock thing? He doesn't buy a huge amount of stocks. He goes really deep into a certain number of stocks. And then he waits. He's patient. He lets the people do the thing, lets them run their system. He's a smart guy, and he's got the results to prove it. And this is the kind of approach that he takes. He's patient. He's not trying to make money week by week, day by day. He's patient. Now, here's another investor. He's less professional. He's investing for himself. He's now become a friend of mine. I met him about 6 years ago in 2018, 19, something like that. And he's now been in this program for a long time. He makes about 40% a year, except for 2022, when he didn't do that well. But over the last 5 or 6 years, he's done extremely well, and he makes about 45% every year pretty consistently, and he loves doing it. He's a pilot. He's got about $1 million portfolio, and he lives off of this. And the reason he's doing it himself is because he went to one of these Wall Street guys, and the guy lost him $3 million, and he promised, I'm never giving up my power and my wealth again. I'm doing it myself. He makes about, I don't know, he's kind of dialed it back these days, but it's about $15,000 to $25,000 a week in the system, and now he loves to travel around the world playing pickleball. Let me let you hear from David. Here he goes.
I got involved with Mark's system 2 years ago this month. My first year was quite a learning experience. I had great successes. Equally, I had great failures. But in 2019, I made 40.6% on my money, which is unheard of for someone with a high school education and no experience trading whatsoever. This system is off the charts. If you listen to Mark, he'll make you rich.
So that's David, and that brings me to a little section of something that I call financial porn, right? And so people laugh at the title, but really is disgusting what can happen out there in the market if you start to do these numbers, right? When you see 1% a week, you're like, yeah, big deal. You see 2% a month or 4% a month, you're like, yeah, that's not going to change my life. But when you start to compound it, it's crazy. And so every once in a while I start messing around with numbers, so I thought I'd give you a shot and let you see what these numbers look like. So here's if you take $100,000 and you don't add anything to it and you get 2% a month. In 10 years, it's a 10 times return. It's a $1,076,000, right? But what if you can get 4% a month, okay? And if you can get 4% a month, now you're taking that million and you're taking that 100,000 and turning it into 11 million, right? And you're like, well, Mark, that sounds unrealistic. Yes, it does, right? The whole premise here is that you don't dig any holes for yourself and you don't lose money, and that's going to happen. You're going to lose money. But hey, we're only trying to get 4% a month, and the less you try to get, the more successful and quote unquote high probability that you have of getting that return that you put out. I can show you when we go deeper into the course, but for right now, just kind of trust me that these are the numbers that if you can get this over and over and over again without losing value, you can make an incredible amount of money. So, and I can show you lots of people that are getting 2 to 4% a month at a very minimum in our program today. So I'm not blowing smoke. I'm trying to be realistic and I'm trying to be conservative. If you watch any of my other videos, you know that sometimes I get 5% in a week. That's 20% in a month, but I'm not talking about that here. I want you to know that this is a very conservative program that you can make aggressive, and I normally do, and some other investors do, but you can be very, very conservative as we go forward here. All right. So the bottom line here, the conclusion is that small wins add up to big gains over time. Okay. So we're really just going for those little wins. That's the whole goal here. And so I talked to you about the cornerstones. There are 3 keys to my proven system for creating income, okay? The first one is to collect that rent, to squeeze the juice, to collect the juice. That's what we want. That's like owning the house and you got a tenant in there that's paying you $3,000 a month for the house. You don't worry about the house going up and down in value. You're worried about the $3,000 a month, and that's what I try to focus on, is that option income, it's my rent or my juice. Okay. Number 2 is probability. So I'm always trying to get probabilities on my side, right? I'm not always going to be right, but when I'm wrong, I want to be wrong small, and when I'm right, I want to be right a little bit bigger. But I'm always going to hedge my risk to the downside because we don't know if stocks are going to go up, down, or sideways. I always kid people, hey, look, don't try to be Nostradamus. You don't know if the stock is going to go up or down. I don't know if the stock is going to be up or down. What we're trying to do is hedge the risk and get probabilities on our side. And the third thing is that financial pornography, right, where we just compound those returns over time and let the system do the work, put the pressure on the system. Now, I've got lots of testimonials and lots of people that have done this kind of stuff, but I'm going to give you just a little smattering of some of the screenshots that I've gotten from texts over the last couple of years. But this first one is a really cool guy. He's got $430,000 invested back in 2022, I think, and he was really excited for his account to get to $500,000, and I believe it did. He said, maybe I'm doing so well I should shoot for the $600,000 by the end of the year. Another investor said, I watched Tesla drop and I was in it, but I was still able to gain 15% year to date with only adding $6,000 to my Roth. So he did pretty well. There's his track record right there with the graph. Pretty good stuff. And then another person says, I'm planning on growing that only 40 to 50% with the cash flow machine. I love the only that he quoted there. And then my Roth accounts, I'm planning on 100% returns. So some people are using this system to get much bigger returns than I talk about, 2 to 4%. He's talking about 100%. And if you watch some of my videos, basically, you know that I use synthetics. And synthetics are the way to leverage your account and add some capability of increasing from 2 to 4% to a bit higher without adding a huge amount of risk. There is risk, and you have to learn what the risk is, and you have to learn how to mitigate it. But that's one of the ways that you can do. That's why you can get 100%. A couple other ones here. Chris says, in meditation this morning, I was feeling a wave of gratitude for what we've learned here. How fortunate are we that while other people were losing money this year, we were able to make gains, or at least at a minimum protect against losses. And here's another person that texted me and said, hey, here's the 200 contracts that I bought 5 weeks ago, and I rolled them down to the 145s. I'm up $123,528. That's 71%, all paid for by the juice. So the juice does help a lot of the income, even when it's going, the stock is going down. It buffers you. It's a hedge, right? And lastly, I'll leave you with Joe's comment. He said, Mark, I wanted to send you a personal note. He says, I'm such a believer in the system and so grateful to be a part of this mastermind group. I have a mastermind group where we get together each week and we mentor each other and all that kind of stuff. End phase, which is the stock he was in, was getting crushed. But as you said, it's just math and it's about the big picture. Right now, the S&P is break even to slightly down since I've started trading. With your philosophy, end phase is down 20%, but he's up 3%. So I think that's pretty cool. Plus the knowledge he's learned with his trading plan is looking like moving forward. that it's priceless. In the 7th worst year since 1927, and 2022 was that year, for the S&P 500, you made a believer in me. Only upside from here, only regret as I didn't start this sooner. So there's some outside stuff that what I'm talking about is not crazy. Maybe it is crazy, but it works. How about that? Let me show you now a trade in the market. Here's the stock that I've just discovered. Even though we're not in a perfect market right now, we're kind of in a red market. I want to just show you how this works so you can see that it's easy to do and that it's realistic. And I'll show you that right now. Here we go. Okay, so let me show you how this works. This is a stock called Meta. It's Facebook. I kind of look at it like a long-term play. I don't see a world without Facebook, unless they get bought out or something. But I think they're going to be around for a while in whatever form. They got Instagram, they got WhatsApp, they got Facebook. They're doing a few other things with Oculus and the glasses. I just don't see a world without Facebook, at least in the next 6 months to a year or 2 years, maybe even. So I'm looking at the stock. It just closed. The market just closed. Let's call it 595 because it shows 595.02 by 595.63. But to round it off, it's going to be somewhere in there. Let's call it about 595. Now, what you do is you pull up what's called an option chain, and it shows all the different options that are traded between the buyers and sellers. And the ones we're looking for are called calls, call options. You call people up. So you want your option to go up. You want your stock to go up. And so what we're looking at is we want to sell the calls. That's the difference. So what I'm doing is I just take my option chain and I go to here where the blue turns to black. That's about the median where the stock goes out of the money. And so we're looking here at the 595 strike price, which is right at the money or slightly in the money, okay? So we're going to be selling these 595s. Now, there's about a 55% chance of it going higher and about a 45% chance of it going lower according to this delta number, something like that. But anyway, it's 50-50. So the stock could go open tomorrow down, it could open up down. It doesn't matter. The stock could open down tomorrow or the stock could open up tomorrow. It's about a 50-50 chance. So, that doesn't matter to me. What matters to me is this column here. It's called the extrinsic value. It might be called the time value on your system. I call it the juice. We're in this for the juice. And if you look at that, you multiply it by 100, and this is $3,300 and a little bit of change per contract, okay? So I'm going to sell that. I'm going to go out and buy the stock, and I'm going to sell those contracts. Well, I want to own 300 shares of Meta, and what I want to do is I want to sell 3 contracts. Each contract is worth 100 shares. I want to sell 3 contracts against it of these 595s, and I want to pick up about $3,300 per contract. I like that. If I do 3 of those contracts, it's pretty easy to do the numbers. It's about $10,000 a month because you can see these go out 31 days. That's a month. So let me just give you the steps to do it, just to kind of go over it. I talked you through it, but here are the steps. You buy 300 shares of a stock at $5.95. It's $178,500. You sell 3 contracts. You get $3,300 per contract. It's about $9,900. Let's call it $10,000. That's the juice. That's the extrinsic value. That's what we're going for. Whether the stock goes up or the stock goes down, we will always get to keep that juice, right? The stock is going to move all around. It's like owning that real estate, right? We're still collecting the money from the tenant, but the valuation of the house might be going up and down. We don't care. We want this juice. We want this extrinsic value. And that gives us an ROI of 65% per year. And I even built a little column into this, and you can do this if you're on Thinkorswim, or most of your brokerage firms will allow you to do this. You can do the covered return. It says 65% per year if you do this trade. Now, I don't know about you, but I think 65% is pretty darn good, right? Specifically, you have to buy a stock and wait for it to go up 65% if you don't do this strategy. But if this stock doesn't do anything, you get that return. You get 65% if it doesn't do anything. So rather than hoping that it goes up, because maybe it won't, because maybe the market's going to go down, we take control and we sell options. We sell 3 contracts, and we're going to do it every month at the money or wherever our strategy is going to take us. So the assumptions are, we do this over and over again all year long, right? And if we could do that over again, and I can't guarantee that we're going to be able to do that over and over again, but we want the stock to stay above the strike price for our maximum value. We don't care if it goes up too much higher. I know it feels a little weird for the stock to go above your strike price if you know options and you know what I'm talking about. We want that. That's our maximum amount of value, is that we buy the stock, we sell the call. That's the maximum amount we're going to make at the strike price. If it goes up higher, our base position goes up higher too, so we're okay, right? If it goes lower, we got to take some some protection measures. And you should protect your position if it drops below your strike price. And I have lots of ways to show you how to do that. But I hope you understand that trade and how that works. So was that cool or what? So you can see it's real easy to buy a stock, sell a call against it, create that income, and just do that system over and over and over again. And just have a disciplined trading plan around it, which I'm not going to be talking about here, but having that system and that trading plan is really important to having success in it. And so you have to build a trading plan with the tools that I can give you. And then from those tools, what you're going to do is create that trading plan, and you're going to bring the right tools to the job, right? I give you the tools, you choose. Hey, we're putting up kitchen cabinets today. I'm going to need a level and a hammer and a drill, right? You bring the tools that I teach you to do, and then you can make that into your trading plan, because we're all different. All right. So what is this? What am I talking about here? And you know what I'm leading to? I'm leading to a little bit of a pitch about what I do, but it's like I feel like I have the cure to cancer. And I don't think you'd be very happy with me if you had cancer and I didn't tell you what the cure is. So I'm going to tell you. If you want to start, shutting this down because I'm pitching, that's fine. But I believe so much in my system that I want to talk about it. So I'm going to do that just now for the next, 4 or 5 minutes. So hang with me and I'll show you what we're talking about. I have a program called the Cash Flow Machine. You've heard me mention it now, right? It's rules, it's strategies, it's tactics. It's talking about building that trading plan. We target 2 to 4% a month. Sometimes we exceed it, sometimes we don't. But our juice is usually between 2 and 4% a month. It doesn't take a huge amount of time. You're not glued to your computer just watching the charts. It's fun if you want, but you can go out and play golf or go to the spa or travel or do whatever. It performs well in all markets. It reduces risk in down markets. It makes income 100% of the time, right? Because you're always collecting the money from the juice, no matter what. That's what we're in this for. We're not hoping the stock goes up and all that kind of stuff and not doing it. We're hedging our bets, which means we limit our upside sometimes. But I'm willing to do that to protect my downside. It is, like I've mentioned before, a probabilities-based system. The cool thing about it is you got a phone or a computer, you can do it from anywhere. It gives you that financial freedom. You can get rid of your 9 to 5 if that's what your goal is. I kind of like working. I kind of like helping people. I kind of like having a purpose. And you can be completely independent by doing this. So a lot of people come to me and they're like, Mark, I'm tired of anesthesiology, or I'm tired of radiology, or I'm tired of working the 9 to 5 from the man. Can this, with my nest egg, this be the ticket for me retiring early or living off it? I'm like, yeah, absolutely. Let's sit down and structure a plan for you, because everybody's different. You've got to be comfortable with this plan, and I help people do that. I'm looking for a few people that get it. I want people that understand that you can make money in every type of the market. I want people that want to create income, right? And get cash flow. I want people that understand that you don't have to spend all your time glued to the computer. And I say it's 20 minutes a week minimum. That's if you do these weekly options, that's true. Otherwise, it's like an hour a month or so. So let me just ask you this question. What if all the system did was teach you a way to trade options for income? Maybe you know about it, maybe you don't. But if it just taught you a way to do that, with a decent enough size account, you can make some good money trading options for income. What if it just showed you how to protect the downside of every trade so you could protect your account? What if it just showed you how to get the probabilities on your side? What if it just showed you how to buy the right stock so that you'd have a better chance of making money, and throw out all those junky stocks like penny stocks and pot stocks and all the meme stocks that people are trading? Just find a good solid super stock like Apple or Nvidia or Tesla or Google. Some of these ones that we wish we had been in, right? What if it just showed you that getting small wins would amount to huge wins over time, right? Would that be valuable to you? If it is, then here we go. Stay tuned, because I'm going to talk to you about my Cash Flow Machine Elite course, right? Here's what you get in the Elite course. You get foundational knowledge, understanding the basics of options, why we trade options, learning, preparation, the foundations. We always have to learn a little bit of vocabulary when we learn something new, right? How to set up your system, how to set up your screeners, analysis, fundamental, technical, the right spot on the chart, how important that is, pattern recognition, pricing options. And then we talk about trading techniques, how you actually can do the physical mechanics. You just saw an example of how I do it. Single leg applications, long call strategies, volatility analysis. Some of this stuff sounds intimidating, but it's actually pretty easy to learn. And once you get the vocabulary down, which only takes a couple hours, then you understand a lot of these different techniques. And then we get into advanced tactics. And if you watch some videos lately of mine, you've seen me talking about synthetics and replacing the stock with an in-the-money call option. And there's some pitfalls with that, but there's a lot of benefits. So I want to teach you all about those things so you have your eyes wide open when you do that. We do trade adjustments because risk management is like the most important part of trading, and it helps because of your mindset. Your mindset is 90% of this game, so you've got to be good with risk management. Otherwise, you lose sleep, and nobody wants that, right? Helps you with your trading plan. Market adaptations, different market conditions. Shows you how to time the market, because you don't want to be in every market. You want to be in the ones that have that tailwind, like I mentioned a minute ago. And then we go specialized strategies, talk about generating returns with covered calls, long-term option strategies for investment, this thing called the compensator, which is really cool actually when you get into synthetics. We really focus on the juice, and we talk about the protection amount, that in-the-money amount that is so important to some of these trades when things are going down. And a lot of people just don't get that, even if they've been trained in covered calls. So that's essentially the system. I want to make a little offer to you. The system is a course with lots and lots of videos, lots and lots of training. I think it's like 40 hours of training. But I'm telling you, I've not gotten any bad reviews on it. People seem to love it, and they love it because I try to, whenever I learn something, I make a video and I put it in there. And I'm always learning, right? I'm always growing. I'm always finding the nuances, and I'm trying to pass them along to my students and maybe to you. So, you can get this complete training program to make 2 to 4% a month. I went and did some research. It's a company out there that charges $19,000, Online Trading Academy, for a program that's kind of similar. And they're great, by the way. So I'm not bad-mouthing anybody. I think any kind of knowledge that you get is great. And I know people that have gone there and they've gotten a lot of knowledge. The thing about them is they kind of cover everything, and they don't really go that deep on a lot of the things, or the one that I think is important. I'm a little different. I don't go into everything. I don't go into iron condors and butterfly spreads and all these things. I go deep on covered calls, right? That's what I do. And I think I'm pretty good at it. But anyway, that's a comparable trading program. So we got 90 plus videos, quizzes, tests delivered to your computer or your phone, lots of hours of training, but it's in-depth training, and I think it's on par with a university level degree. We do so much training, but we do it in a concentrated period of time. And so I'm very proud of the fact that we're able to train people like that. It's for beginners to advanced. So even if you know covered calls or you think you do, there's a different way of thinking about them that I teach. But you can go all the way up to the advanced level. It's going to show you a proven system. So let's go through this. It's not just a course. I want to throw in a couple bonuses to make this irresistible for you. So I've got 3 bonuses to throw in here. The first one is a call with me. A lot of people want to kind of finish the course and ask me a couple questions, or have them help me do their first trade or second trade or whatever. I'm happy to mentor you. I charge a lot of money for mentorship, so that's $1,000 value for that call. Plus, I'm going to throw in 2 other things: the rules of the cash flow machine on a PDF, which you should laminate, put up on your wall next to your trading plan. And then the third thing is the cash flow machine calculator, which is going to help you, kind of determine apples and apples when you're comparing different investments. So those are the 3 things that I want to offer. It's about a $21,000 value. You've seen these things before. I'm not going to charge you $21,000. So I have a standing offer now for $2,997 on this set, but I'm going to give you the bonuses as well. So you get the 3 bonuses to make this enticing for you to make that choice right now. Because look, I just showed you a trade that makes you a lot of money, right? And you can make a lot of money by doing your own trades, and you can also shortcut your knowledge by getting it all in one spot. I've got tons of videos out on YouTube that I put out for free. But if you want everything in one nice little package, you got to pay for it, right? And I've put a ton of effort into this over the last several years. My life's work over the last 40-something years of trading has led me to this point where I'm very proud to be able to offer something for this low price. I think it's a low price because you can make your money back very quickly and pay for it. And it's an investment in yourself that you're going to be able to use the rest of your life. So I'm going to stop talking so much here. I'm just going to say, look, it's $2,997 plus you get the 3 bonuses. I'll give a link here at the bottom in the description, and you can go ahead and make your decision. You can start watching the videos. You can start changing your thinking. I always say you got to take your brain out of your head, go over here and wash it, and turn it upside down, put it back in, because that's how you have to change your thinking about what covered calls are. And if you've been watching some of my videos, you know that I don't think like everybody else. In fact, I don't think anybody else has a program out there that talks about the juice the way we do, the way I do. And so I'm proud of that, because a lot of people are changing their lives and have been for the last several years. And then the goal is to get you to start making income right away. So it's designed to be a 4 to 8 week course. I say 4 to 8 because some people watch me on 2x speed, and they zip through all the videos and quizzes. Some people just like to go through it a couple times, and that might take a little bit longer. It's really up to you. It's self-guided, and it's a self-study program. I'm very proud of it. Love to have you in it. Love to see you at the next steps after that. But if you don't want to buy it, that's cool. Get some training from someone, right? Get some training from someone. In life, you're either trained or you're untrained. And those are both okay. But if you want to do something well, get trained in it, right? There's no reason to try to figure it out on yourself. It took me years to figure this out by myself, right? And so I'm shortcutting that period, that learning period, into 4 to 8 weeks, or maybe even less if you watch me on 2X. And you know, that's the idea, is that you can get this knowledge, you can get out there and start making the money. So get trained. So if there's somebody else out offering something, maybe you like people with hair, I don't know, go buy one of their courses, but get trained. Like, don't just sit there and try to figure it all out yourself. There's too much. You're putting your hard-earned money at risk, and there's too much out there for you to learn all by yourself. Have somebody else that can help you, whether it's me or somebody else. All right, enough for me. I hope you enjoyed it. I hope you got what you wanted out of this. My goal was to get you the thinking of how my thinking works, right? And a lot of times we don't think about our thinking, do we? We just kind of figure out, well, it came from the ether, our parents, the TV, our friends, and we don't really put time into thinking about our thinking. I wanted you to try to think about your thinking and what you're talking about. I gave you some examples. I hope you like what I did today. I'm done. I'd love to see you on the inside of the course. Click on the link below, and we'll go from there. Take care, and I'll see you in the next video. Bye. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.